Okay, good morning then, guys. Looking forward to the week ahead. New month, obviously, start of August, so we move into the middle part of quarter three. So I'm going to look at just the July performance in a minute. We're going to look at some of the winners and losers, which were the markets that outperformed and underperformed in July. But just to kind of take stock here, looking at my daily charts, we've got the S&P and the DAX at the top, and then we've got the euro dollar, the Bund in the middle, and then oil bottom right. So, it's a pretty interesting mix here. I mean, oil perhaps is the market that is the standout one on this screenshot, given that we've made some pretty phenomenal moves to the downside. And when I show you the stats on July performance, then it will not surprise you to see that oil is right at the bottom end of that spectrum in terms of performance. So crude oil prices, if I just zoom in, we're just broken below, this morning we're below the double bottom from last week. So this is the 28th of July low. It was also the Friday low on the 31st of July. So this slide to the downside continues. We continue to, make our way towards the target, which is $42. That's the low of the year. So technically, this morning, important that oil has broken through that support and continues its slide. I'll talk about the manufacturing numbers in a second, but we've had some pretty decent numbers in the main, except for one very notable exception. This is European manufacturing. So let's talk about the notable exception. And actually, to begin with, I'll bring into the screenshot here. We have finally, the Greek stock exchange is open for business. It's been shut. The Greek stock exchange has been shut for, I think it's about 5 weeks. And so today is the first time it's traded and it's open since well before the referendum vote. And as you can see here, we've got it's a bit of a bloodbath, particularly on the banks. You've got a lot of the banks down, actually limit down at 30%. But there are many other companies, huge losses here seen on the Athens Stock Exchange as it opens for the first time since before the referendum. And we've just had, and just to give you an indication as to how damaging this whole process has been for Greece, and I mean economically, whilst there's been so much uncertainty about what's going to happen, plus capital controls, which means that people just can't get money out of the bank to spend. Well, what kind of effect does this have on the economy? Well, check out the Greek manufacturing PMI number that was released about 10 minutes ago. I mean, this is, I've never seen anything like this. This is a manufacturing PMI number that's printed down at 30. So the Greek PMI is at 30. I've never, ever seen a number anywhere near 30. This is just an absolute collapse here. Quite extraordinary, and just evidence, proof that whilst all this negotiating has been going on, all this uncertainty, what's happened, the underlying economy is getting pummeled again. So this is phenomenally bad news. So Greece manufacturing PMI at 30, stock exchange open for the first time for 5 weeks, with many of the stocks limit down 30%. So it's been a pretty ugly morning on the Greek front so far. But if we look at other regions of the Eurozone, then it's a different story, because if we just take a look at Italy's PMI here, one sec, let me just sort this screenshot out. If we look at Italy's PMI number, it's definitely a different story. So this is looking, let me take this back to 2012, let's say. Hang on a sec. Let me just adjust my screenshot here. So here's the Italian PMI chart going back to 2012. I can't get it back any further, but this is the highest reading. You can't see it on this chart, but since April 2011. So nice and strong. The German figure, that came in marginally better than expected as well, 51.8. So in the main, you've got some decent numbers on the manufacturing side from Europe, with the notable exception of Greece. But I'd say that this is decent evidence that you are seeing, if we can just get past this Greek risk, if they can negotiate a bailout and at the very least, just delay that problem for 3 years' time, then maybe we can see this economic situation in the Eurozone begin to pick up some momentum. We have an ECB, a European Central Bank, that is printing money at full speed, 60 billion euros a month. And so, is this what we're seeing in Italy with those manufacturing PMI figures? Is that evidence that QE is working? And finally, we're getting a revival of some economic activity in the second biggest economic region in the world, the Eurozone, which has really not contributed anything to global growth for at least 5 years. So, decent data now. On the market reaction side, we saw, I've got daily charts here, but let's perhaps zoom in a little bit. If I just bring on my Euro Stoxx chart, and it was actually the Italian figure that definitely triggered the reaction. So Euro Stoxx breaking up above Friday's high. We're just pulling back to test this now. So this will be support at 3,605. It was resistance, Friday's high. It's been broken. We're now getting a pullback, so may well get support around that area. But just to give you an idea, we've had a decent. So I haven't adjusted the lines on this. Let me do this now. So we've had a decent a week last week, I guess. In the end, obviously at the start of the week, all equity markets got pummeled, and that's because China dumped about 8% the Chinese stock market at the beginning of last week. But this, after that Monday sort of bad start, things have drifted and been improving as we've been going through the week. So we've got some sort of upward trend channel scenario going on here. I haven't drawn that particularly well. I'll redraw it in a minute, but you get what I mean. After that really bad start to last week, it's been generally positive, with that now being added to this morning, mainly thanks to that Italian PMI figure. With regards to the Bund, the Bund, when stocks popped higher, because the DAX popped higher as well as Euro Stoxx, and the Bund drifted lower, and we did break below the kind of earlier morning's low, but it doesn't seem to be too much appetite on the downside. But we are below the pivot level, and we'll see if that brings resistance. Interesting start to the week. It's going to be a busy old week. We've got a lot of data, culminating in the big event on Friday at 1:30 when we get the US labour market report. We get the non-farm payrolls number. We'll get the average hourly earnings data, and this is very important information when we're trying to decide if the Fed are going to make their move in September or they're going to wait until later in the year. So definitely big market moving events ahead of us. Let's just look at the calendar for today. Let me just bring this on to screenshot. Hang on a second. Where is it? Here we go. So we've got UK manufacturing PMI numbers due at 9:30. So here we're expecting 51.5, marginally higher than the preliminary number that was 51.4. So this is the next set of data coming in 15 minutes' time. Then we're going to wait till the afternoon, and we start getting figures that the kind of big week for data out of the US starts today, with personal income and personal spending numbers at 1:30. We also get some important PCE deflator numbers. These are inflationary figures, and of course inflation is right now the kind of number one measure to be looking at when trying to judge what the Fed are going to do with rates. Manufacturing PMI and construction spending later on, ISM manufacturing at 3 o'clock. So plenty of data. As always, earnings season continues as well. But just talking about inflation and talking about the Fed, if I just go to a 1 hour chart, of course, Friday's session, I guess less pronounced on the S&P. I'll just show you the Eurodollar chart in a minute. I guess in the end, Friday's session, let me just move some of these lines. We didn't have too much most of the movement came on the euro dollar. I'm just going to let me make my euro dollar chart a bit bigger here, and we just zoom in on what was a pretty phenomenal sort of spike to the upside that came very surprisingly. Let me just adjust this chart. Just a piece of data that we'd never really paid any attention to ever, and I mean that. The employment cost index number from the US was announced at 130, and it showed that the cost of employment, the cost of employing people, the employment cost index had dropped to a 35-year low. So this sent the dollar weakening quite dramatically, and we had a pretty powerful move, well, to say the least. It was like a 150 pip climb to the upside on the euro dollar as the dollar weakened aggressively, and then we hit the top, we turned, and it came all the way back. It was quite an extraordinary session in many respects, and here we are this morning breaking below that sort of Friday afternoon low. So temporarily on Friday, people latched onto this employment cost index number, and it was so wildly out of line and such a dramatic number, it being a 35-year low, that people started to genuinely take this information and say that the Fed are going to see this and they're not going to hike rates in September. But then all things reversed, and I think because ultimately it is old data. That was Q2, that information. So we talked about this on Friday. But that's the employment cost index for April, May and June. That's quite old news. We're going to get plenty more employment data, especially average hourly earnings, that's going to be announced on Friday. That's much more important data for the Fed than Q2's employment cost index. So I think it was a signal of actually a bit of a lack of liquidity in these markets in the summer markets, that maybe saw this move quite aggressively exaggerated, but it looks like that information from Friday has kind of been forgotten about now. The S&P did briefly pop to the upside, but it didn't last long, and it all got reversed, but it sent markets in a spin for a period, and the Bund dropped sharply as T-notes. The Bund dropped sharply in the morning on Friday, and then that data at 1:30 off the US figures for the Bund. Well, let me just go back and remind myself. Yeah, you got that pop to the upside, but again, that didn't last too long. But a pretty interesting figure, and I think just a sign that people now the Fed could hike rates at the next meeting. This is it. We're here. September is coming. There are no more meetings now from the Fed until September, and I think therefore any employment data, any inflation data is perhaps going to get or maybe trigger an exaggerated market reaction if it's out of line information, given poor liquidity as we hit the summer doldrums. So interesting times. Now I'm going to show you the chart for July's performance statistics here. Hang on. So here's looking at July and the winners and losers. And look at the right hand side of this chart, dominated by commodities. You've got US WTI crude as the worst performer, over 20% down on the month. You've got wheat in here, Brent crude. You then got the Shanghai composite. But certainly dominated by commodities and China and emerging markets over on the right hand side of this chart. Notable heavy underperformance. And then flip onto the opposite side and you've got Europe, who are the winners. So the FTSE MIB, that's the Italian stock market. You've got IBEX, that's the Spanish stock market. The Dow Jones Stock 600 banks. So this is a result of the fact that Greece didn't default, and so that's the positive reaction you can see there. So, as pretty dramatic, to say the least, spectrum of performance here with the commodity space. I mean, last month, July, that literally one of the most remarkable months for commodity markets ever, in terms of the scale of the declines. If we just go back and remind ourselves and look at this oil chart, because it's still sliding this morning, it's just extraordinary. On the 1st of July, we were trading up at $59, and so percentage-wise, it's an absolute collapse here, and this is very important. I think this is important for the Fed. I think that if commodity markets stay under pressure, if there's no commodity market rebound in August, it's going to be very difficult for the Fed to raise rates, I think, in September, because ultimately this decline, dramatic decline in commodity pricing, will have a further negative impact on inflation. So this is important. I mean, I would say, we're coming towards some potentially very good sort of medium to long-term trading opportunities. Buying the commodity space, looking to, get long gold, long oil. How about these industrial commodities? Copper down at like 13, 14-year lows. I mean, I think we are approaching some pretty interesting and attractive long-term investment ideas. I don't think we're there yet. I think these commodity markets perhaps have a little bit more to go. I think oil is, already confirming that this morning with this move down below last week's double bottom. Okay, so we've got manufacturing data coming out of the UK. This is due in 8 minutes. We've got markets that have initially responded positively to particularly the Italian manufacturing PMI number, but actually those gains seem to have mostly been given back. So the DAX is trading 0.1% up on the session. You've got the Bund mildly negative. Euro-dollar is roughly flat. We did have a move below Friday afternoon's low, but that's just lifted back higher. So we're just going to look at this UK data. It's coming at 7.5 minutes, and we're expecting 51.5. And then we'll go from there. Plenty of action this week. Really important, to say the least, really important data coming on Friday with the employment report, the penultimate employment report before the Fed's September meeting. All right, guys, enjoy the session.